Nigeria records 39% increase in foreign trade volume. Profit taking on Nigeria's 10-year bond leads to decline of equities at the stock markets. You have made satisfactory progress. EITI ranks Nigeria high in the implementation of the principles in extractive sector. 2019 International Women's Day, Better Balance, Better World is the focus with the hashtag Balance for Better. Business Express will be looking at these issues. I am Amina Nujaim, welcoming you to the program, reaching you on the network service of the Nigerian Television Authority. Nigeria recorded a total trade value of 32.26 trillion naira in 2018, representing 39.3% increase over the corresponding period in 2017. The National Bureau of Statistics said this in its foreign trade in goods statistics for fourth quarter of 2018, that the volume of trade merchandise trade in 2018 was the highest recorded since 2014, nearly double pre-recession levels. During the fourth quarter of 2018, total merchandise trade stood at 8.60 trillion naira compared to its value of 9.06 trillion naira recorded in the third quarter of the year. Total export components of the trade recorded at 5.02 trillion naira represented an increase of 3.5% over the third quarter of 2018. Meanwhile, the Bureau said the import component stood at 3.58 trillion naira in the fourth quarter of 2018, indicating a drop of 631.6 billion naira or 15% compared to the third quarter of 2018, but an increase of 69.6% when compared with the corresponding quarter in 2017. The NBS stated that the increase in export value and decrease in import value resulted in a favorable trade balance of 125.5% over the preceding quarter. Crude oil export remains the mainstay of the economy, but the value of manufactured goods export also rose. India, Spain, France, South Africa and the Netherlands were the country's major export trading partners in the quarter under review, while China, US, Netherlands, India and Belgium were the major import trading partners. The Nigeria Extractive Industry Transparency Initiative, NATI, has said that Nigeria lost at least $16 billion in 10 years due to non-review of the 1993 production sharing contracts with oil companies. This was one of the highlights of the latest report by NATI released in Abuja at the weekend, tagged "The Steep Cost of Inaction." It said the losses were recorded between 2008 and 2017. The study, done in conjunction with Open Oil, a Berlin-based extractive sector transparency group, found that losses could be up to $28 billion if, after the review, the Federation were allowed to share profit from 2 additional licenses. NATI therefore called for an urgent review of the PSCS to stem the huge revenue losses to the Federation. It added that the review was particularly important for Nigeria because oil production from PSCS had surpassed production from joint ventures, with PSCS now contributing the largest share to Federation revenue. NATI observed that this review should have been activated in 2004 when oil prices exceeded the $20 per barrel mark. Meanwhile, the International Board of EITI has ranked Nigeria as having made satisfactory progress in implementation of its principles in the country's extractive sector. This is the second highest ranking in EITI implementation. The global body also applauded Nigeria for using EITI process to shape reforms and improve transparency in the extractive sector. Leah Katuma Batunde has more on the ranking.
Having met all the requirements of the Extractive Industry Transparency Initiative (EITI) standard, Nigeria seeks to entrench transparency in government and company systems. The decision to so rank Nigeria for making satisfactory progress was taken in Ukraine at the 42nd meeting of the EITI board. Nigeria's pioneering use of multi-stakeholder governance to disclose data on its upstream extractives value chain was also recognized by the board. It became the first Anglophone African country to have made satisfactory progress in implementing all the requirements of the EITA standard and now faces the challenge of entrenching this transparency in routine government and company systems. Over 15 years of implementing the EITI, the Nigerian EITI NATI has become an independent watchdog that holds stakeholders in the crucial hydrocarbons and more recently solid minerals sector to account. Since 2017, NATI has disclosed key data on its allocation of licenses, on the administration of oil and gas subnational transfers, and on crude sales and other processes within the Nigerian National Petroleum Corporation (NNPC). Minister of Finance and an EITI board member Zainab Shamsuna Ahmed said NATI reports form the basis for reforms in the oil, gas and mining industry as was laid out in President Muhammadu Buhari's 2015 political campaign manifesto. Inspired by the EITI, the Nigerian government now conducts monthly routine reconciliations for all sectors, not just extractives, which has increased government revenues. Nigeria is Africa's biggest oil-producing nation, currently pumps around 2 million barrels of oil a day and plans to roughly double output by 2020. NATI had identified low perception index, weak regulatory architecture, and the absence of mining majors as the bane of the sector. Nigeria is considered a global haven for 54 unexploited mineral resources strewn across 22 states of the country.
Faith Wandishi joins us to look at Nigeria's position in the Extractive Industry and Transparency Initiative (EITI). She is an EITI International Board member representing Anglophone civil society stakeholder. Glad to have you join us on the program.
So much, thank you. Good afternoon, yes, thank you.
Now, transparency has been an issue globally. Now, coming back home to Nigeria, how would you rank Nigeria's performance 15 years of implementing EITI?
Actually, Nigeria has been a pace setter in the implementation of the EITI way back to the inception of democracy in 1999 in Nigeria. There was that need to change the narrative about the business, the economy, especially the oil and gas sector.
No, before you go further, why is transparency an issue?
It is an issue because, you know, transparency is more like accountability, shining light on what issues are, letting the citizens know how far we have gone, such that you are able to address expectations. Because when there's no transparency, people could have high expectations because they don't know what is coming in. Every time people talk about Nigeria being an oil-rich country, natural resources, we have X billion dollars, X trillion naira, and people are like, wow, this amount of money, and we are not getting development. So transparency becomes important because when you explain to people how this money is come in and how they're expended, you tend to get the buy-in of the citizens in the implementation or the long-term, you know, implementation or development of a country. And that's why transparency is important, and they're making it a global issue.
Okay. Now, how satisfied are you with the ranking of EITI?
I was one of those who sat down on the board
Wow.
to do that ranking. This is not the first time Nigeria has been ranked. Nigeria was first ranked in 2011.
Okay.
The EITI operates a process where a kind of system where countries need to give like a feedback, a report back on what you have done and how far you have implemented or agreed to implement the EITI itself. And one of those assessment mechanism is what we call validation. So Nigeria went through a validation process. They first went through in 2011, and Nigeria was a compliant country. And then people came out to say, oh, if you say countries are compliant, you still have issues of corruption, you still have issues of non-transparency, accountability. So why would you EITI come out and say a country like Nigeria is compliant? Because if you take literally the meaning of compliance, it means that everywhere they have 100%. So we sat down as members of the board. I'm a member of the implementing committee of the international board. We sat down to say, how do we, what kind of words or nomenclature do we use now to assess countries to say that countries are making progress? And so we came out with meaningful progress and satisfactory progress. Luckily, Nigeria has just last week in Ukraine, Nigeria was adjudged the second African country with satisfactory progress. The first African country was Senegal, but Nigeria is the first Anglophone African country to be adjudged. What it means is that Nigeria has done well. We should give Nigeria kudos, clap for Nigeria. But I think you know, when they say that you have done well, it means that more is expected of you.
So what did Nigeria do right?
What Nigeria did right, one, in looking at there are different areas of assessment. One is the multi-stakeholder approach aspect of it. And when you talk about multi-stakeholder approach aspect of it in the EITI, it means the participation of civil society, the participation of the private sector, and the participation of government. Of course, Nigeria was the first country ever in the history of the EITI to have a law to guide the implementation of the EITI, called the Native Act 2007. So a lot of other countries have come up with their own laws following the guidelines. So there are still certain things we need to look at that law to conform with that. That's one of the things that Nigeria did. And then the second part that Nigeria did was also the tracking. The periodic tracking of information, the different kinds of systems that have been set up. For instance, Nigeria is the only country right now that has what we call the Companies Forum, where the companies, the private sector, would sit down to talk about the report. And then you have the Civil Society Forum, the Civil Society Steering Committee, and Civil Society Forum. And then there's also the larger group that is called the Interministerial Taxing. But it is called Interministerial Taxing, where you have decision makers at the hierarchy of top level of government sitting down with government, with companies, and with civil society to look at the reports and going about remediation. Okay,
you're talking about the participation of various sectors of the economy. Yeah. What is the role of women in all of this?
Yes, you know, women, for me, I say women are the drivers of any economy. But unfortunately, where do we find them? We find them at the lower ranks of it. When you talk about taxes, and I say that if we take collectively the amount that women pay in taxes, usually it's more, because most times some of these taxes are paid in an informal way. If you put the percentage of people in the informal sector with the percentage of those in the formal sector, the kind of taxes they pay, you will know that those in the formal sector are actually overtaxed, and women form the greater population there. And then when you come to the extractives, for instance, when we are talking about the extractives in the Nigerian context of it, we are talking about oil and gas and mining. So if you go to the top directors, the CEOs of companies, you hardly find women there.
Would you now say gender balance is an issue?
It's a big issue, and I want to tell you, last week too, on the EITI, for 6 years I've been on the EITI International Board, and I've been so passionate about the issue of gender, and now the EITI has agreed to look at very closely the issue of gender. And it's important that the theme for 2019 International Women's Day is balance for more. You understand it? So you now have an EITI or a global body that is looking at the issue of gender. in different areas. One, the reason why that is important is the first two principles of the EITI talks about poverty reduction and national development. And there's no way you can talk about poverty reduction without talking about the gender implications, without talking about the impact on women. And you cannot also talk about national development without looking at the number of people you have taken from one level of the economy to the other level. So that's why gender is really important. It talks about, for instance, the EITI has a multi-stakeholder kind of management where you have equal representation of the different stakeholders. So, for instance, the EITI want to see how many women do you have on that kind of decision-making body within your country. How many women are active players within your oil and gas sector or your mining sector. We know, for instance, if you're going through this Nasarawa area, you see a lot of women breaking stone, but how much do they get in terms of financial gain? Do they get out of that? Those people who come with their trucks to carry that usually gain more. So if we begin now to look at gender, look at the EITI with a gender lens, you create more opportunity for women to benefit and to participate in the areas that are very important for them to participate.
Yeah. There's hope for women.
There's hope, there's hope, and the EITI is shining the light to that.
Okay. Yeah. Now, talking about reforms, what reforms do you think Nigeria needs in the oil and gas and mining sector to optimize the performance of that sector?
For instance, we've been talking about the petroleum industry bill, the reforms in that area. There are so many recommendations that have been made by the NATI report in Nigeria. We need to look at that very closely. And yesterday, NATI came out with another publication about what we are losing from our production sharing contracts, because of the fact that we have not reviewed our contracts in the past. And then the EITI is also looking at the issue of contract transparency. So these are some of the things that we need to reform. For instance, let there be contract transparency, such that when you open up your contracting process, people who are knowledgeable about it can say, hey, government, do you know that if you go through this line, you're going to lose this, people will not benefit. That's one area. Then on the other area of participation, opening up the process. For instance, in the mining sector, there's a $2.5 billion 2.5 billion naira that the president had made available for people who are in artisanal mining, small scale mining to access. But I tell you, for 2 years, they have not been able to access that. What is the bottleneck? What are the clogs? So we need to review the processes of this assessment. And when you put such loans, women hardly are able to access that because one of collateral and other things. If men are complaining that they cannot access that, then you know that women are doubly complaining because they cannot access
sounds
that.
like there's still some work to be done.
A lot of work,
Well, Faith Wadishi, thank you for joining us on Business Express. Faith is an EITI International Board member representing Anglophone civil society. Thank you.
Thank you so much for having me. Thank you.
With the national elections over, currency traders set agenda for government with the belief that a lower foreign exchange regime would stabilize local currency, raise investors' confidence, improve remittances flows, and entrench fiscal discipline. Let's see how the Naira is trading alongside other major currencies. Last week, Nigerian stocks closed out red. Moplang Dakok has an overview of market performances.
A turnover of 1.7 billion shares worth 19.6 billion naira in 22,319 deals were traded in the week ended 1st March by investors on the floor of the exchange. The NSE All-Share Index depreciated by 2.12% to close the week at 31,827.24, while market capitalization stood at 11.869 trillion naira. The financial services industry led the activity chart with 1.377 billion shares. The conglomerates industry followed with 115.142 million shares, and the third place was the consumer goods industry. Trading in the top three equities, Diamond, Access and Zenith Bank accounted for 594.377 million shares, worth 4.757 billion naira in 4,315 deals in the 5 trading days of the week. A total of 101,254 units of exchange-traded products ETPs valued at 577,835 naira executed in 19 deals were also traded during the week, as well as 25,740 units of federal government bonds valued at 26,597 million naira. All other indices finished lower with the exception of the NSE Insurance and NSE Industrial Goods indices, which rose by 3.01% and 0.93%, while the NSE ASEM Index closed flat. 26 equities appreciated in price, 38 equities depreciated in price, while 104 equities remained unchanged, higher than 96 equities recorded in the preceding week.
A look at global market. US-China trade continues to take toll on global stocks. Bossede Able has been following stock markets across the globe.
Global stocks commenced the first day of the week, 4th March, mostly positive. Trade in Africa opened mostly higher. Tunisia's Tunidex, Nairobi All-Share, South Africa's JSA Africa Top 40 and Ghana's GSA Composite Index started on the rise, while Namibia Overall Index opened red. European stocks trade higher in early trading as investors digested the latest news surrounding trade discussions between the US and China. Stocks in Asia advanced following reports that the US and China might be close to finalizing a trade deal, with Beijing offering to lower tariffs on certain US products. Also in the United States, stock futures were higher on the back of renewed hopes in trade talks between the US and China. Dow rose 68 points, indicating a positive open of more than 74 points. Futures on the S&P and Nasdaq Composite Index were also seen slightly higher.
Now, oil prices rose on Monday, buoyed by output cuts by Organization of Petroleum Exporting Countries and reports that the United States and China are close to a deal to end a year-long tariff war. The US and China appeared close to a deal that will roll back US tariffs at least $200 billion worth of Chinese goods. Hopes of an end to the trade spite between the two world's biggest economies added support to a market that has been rallying for the past 2 months on cuts to production. A Reuters survey found that supply from OPEC fell to a 4-year low in February as top exporter Saudi Arabia and its allies over-delivered on the group's supply pact, while Venezuela output registered a further decline. Oil prices have been further pushed up by US sanctions against OPEC members Iran and Venezuela, which Barclays Bank estimates to have resulted in a reduction of around 2 million barrels per day in global crude supply. On that note, we take a look at how commodities are faring in the global market. With that, we come to the end of this edition of Business Express. This is to inform you that this and all previous episodes are available on YouTube, and you can also communicate with us on Twitter, and the handle is NTA News Now. Have a fruitful week ahead. Thanks for watching. I am Amina Nuje.